Alright then, standard costing, quick fire. Standard costing detailed 3-hour video is already there. You can see that, but this is quick fire. So standard costing, so you will have to set standards. Now again, not focusing more on the history geography, you can see there for that. As a businessman, I am concerned with my net profit. I am concerned with my net profit. मुझे profit चाहिए. क्या चाहिए मुझे? Profit चाहिए मुझे. Profit कैसे मिलेगा? Sir, profit is nothing but sales minus costs. What is net profit? What is profit? It is sales minus costs. What are your costs? These are divided into aspects again. So there is a material cost, there is a labor, there are overheads. So this overheads is further subdivided into variable and fixed. Correct? So there is a net profit. So I will have to start at the start of the day, determine what exactly is the net profit that I am going to earn from the activities of my business. So first April of the year, I will find out my standard net profit. This standard net profit will be based on standard sales minus standard costs. Costs will obviously constitute of material, labor and overheads. Overheads in turn will constitute of variable and fixed. So this is the whole gamut of standard costing. Now ये पूरा मेरा standard net profit आया standard sales की बदौलत और standard costs की बदौलत. Standard cost में standard material, standard labor, standard overhead, standard variable overhead, standard fixed overhead की बदौलत ये सब हुआ मेरा. Now I am comparing it with the actual, resulting into variances, and that is now what we are going to analyze. The first analysis is going to be analysis of material variances. Analysis of material variances. In that, the first is material cost variance. So now, again, the system will be quite simple. First, you will have to find out what exactly is the standard which is set. Sorry, what is the budget which is set. Again, don't get confused. Budget मतलब वही मेरा standard. Based on this, I will see कि मेरा actual में कितना production हुआ. So budgeted मेरा production था अगर 1000 units का, output का budgeted production output मैंने plan किया था 1000 units का, and मैंने actual में बनाया है 10,000 units का output, 10,000 units का output. So I will have to restate this to 10,000 as well by multiplying each number by 10, so that they are comparable. This thing is applicable for material, for labor, for variable overheads, mind you. So I am just saying it for the first time. Labor and overheads, variable overheads, you have to apply the same logic. So I will make a budget. If this budget is, or standard is of 1000 output, units of output, and actual maybe 1000 units of output ही मेरा बना है, then in that case they are comparable, no need to make a revise. But if this is for 1 unit and this is for 10,000, ensure to compute or convert this into 10,000 units. अगर 1000 का है, ये 10,000 का है, 10,000 units बना दो, so that the output is comparable in order to analyze the inputs, which is material. Output should be made comparable in order to analyze the input. Output को analyze नहीं करना है. आउटपुट बनने के लिए जो इनपुट यूज हुआ है उसको एनालाइज करना है. तो आउटपुट को तो कांस्टेंट रखूं सो दैट इनपुट का एनालिसिस कर सकूं. आई होप दैट लॉजिक प्रिवेल्स एटलीस्ट एट सीए फाइनल लेवल, राइट? सो दिस इज द बेसिक थिंग दैट आई एम ऑलवेज गोइंग टू डू. नाउ मटेरियल वेरिएंसेस. फर्स्ट इन लाइन इज मटेरियल कॉस्ट वेरिएंस. मटेरियल कॉस्ट वेरिएंस. सो क्विकली वी विल जस्ट formulate. So material cost variance means standard material cost that I was planning to incur as compared with the actual material cost that I have incurred. So as compared with the actual material cost that I have incurred. Standard material cost for actual production minus actual material cost by default for actual production. So how do you find out this standard material cost for actual production? Again I am telling you, actual production को तो equate करेंगे. Yes, correct. So standard material cost for actual production minus actual material cost. What is this standard material cost for actual production? It is standard quantity. Standard quantity of what? It is standard quantity of input. Multiply by standard rate of what? Standard rate of input. Minus actual material cost. What is actual material cost? It is actual quantity of input. Multiply by actual rate. Actual rate of what, sir? Actual rate of input. So this is what will give me actual material cost. So standard material cost for actual production minus actual material cost, and this is the formula for the same. This is further subdivided into material price variance and material usage variance. Correct? Now, for material variances, there are two managers who are responsible. One is called as the purchase manager, जिसको अपन hit करेंगे for the material price variances, and the other is my production manager, जिसको अपन hit करेंगे for the material usage variance. Material price variance for purchase of what? Purchase of raw material. So raw material purchase करने की वजह से जो material price variance आया है, purchase manager is responsible for that. So here purchase manager responsibility, here production manager का responsibility. Price का issue है. So standard rate किसका? Of input minus actual rate किसका? Of input. Sir SR minus AR सीधा लिखो, हमको समझ जाएगा? No. Don't do that mistake. Always get it in your DNA as far as standard costing is concerned. Try to say these full terms. Because when questions are asked, if these full terms are not in your head, then probably it results in confusion. So please have that system wherein you are understanding it this way. So standard rate of input minus actual rate of input multiply by purchase manager. Purchase manager goes outside to purchase the actual quantity of input. Material usage variance, production manager is responsible. So this is more resulting from the consumption aspect. So consumption aspect को अगर मैं इधर ध्यान देता हूँ, तो standard quantity of input for actual production. Standard quantity of input for actual production minus actual quantity of input. So again, this input is standard quantity of input for actual production. Actual production के लिए कितना standard quantity of input use हुआ है, minus actual quantity of input into, I will say, standard rate. Why? Because production manager is inside the factory, not aware of what rate is going outside the market. So standard rate of input. This is further, material usage variance is further subdivided into two more aspects. One is called as the material mix variance and the other is called as the material sub-usage variance. Correct? Now, what is material mix variance? Go by the format. So, if you want to understand the format, you can refer my detailed lecture. You will find out the format. So, this is how the whole system works. So, suppose there is a material A and there is a material B. So, there is a material A, there is material B. 300, 200, total कितना हो गया? 500. There is another, say for 1 unit of output, this is my standard, this is my actual. कितना actual में बनाया? 1 unit of output. इधर 400 यूज किया, इधर 200 यूज किया, तो टोटल कितना हो गया? 600. Now is the mix same? So mix, see what is the mix, as in what is the ratio of standard? 3:2. What is the ratio here? It is 2:1. So is the mix same? No. So material mix variance आएगा. Total कितना quantity input use हुआ है? 500. कितना होना चाहिए था rather? 500. कितना use हुआ है? 600. तो material sub usage variance भी आएगा. All you have to do is just equalize this. So make this as 600. Ratio के लिए I will take this 3:2. So 3:2 के ratio में if you do, then this will become 360 and this will become 240. So this 600 is copied here, but this will not be in 2:1 ratio, it will be in the ratio of this. So 3:2. So 3:2 के ratio में ये 600 आ जाएगा. Correct? Now material mix variance and material sub usage variance. अभी mix का issue किसका है? Mix का issue किसका है और सब यूजेज का इशू किसका है। मिक्स 3:2 होना चाहिए था, ये 3:2 है, तो इन दोनों का मिक्स का इशू है क्या? नहीं, मिक्स 3:2 होना चाहिए था, है 2:1। तो कहना इसे मिक्स का इशू किसका है? स्टैंडर्ड मिक्स क्वांटिटी का और एक्चुअल क्वांटिटी का। किन दोनों का है? स्टैंडर्ड मिक्स क्वांटिटी का और एक्चुअल का। तो मेरा मटेरियल मिक्स वेरिएंस का फॉर्मूला हो जाएगा स्टैंडर्ड मिक्स क्वांटिटी माइनस एक्चुअल क्वांटिटी इनटू स्टैंडर्ड रेट। सब यूजेज इज बेस्ड ऑन टोटलिटी। इधर 500 है, इधर टोटल कितना है? 600। तो ये दोनों का सब यूजेज का टोटल ऑफ इनपुट्स यूज का इशू है। सो वी विल से इन दोनों का प्रॉब्लम है फॉर स्टैंडर्ड क्वांटिटी माइनस स्टैंडर्ड मिक्स क्वांटिटी इनटू स्टैंडर्ड रेट। सो दिस इज बेस्ड ऑन दिस, whereas that formula is based on this, and this with this we complete the material variances. So ये मेरा material variances complete हो गया। Any questions you can ask, ठीक है? Thank you. So this is material variances. Next in line, labor variances. On similar lines, again remember, even while analyzing the variances between the labor variances, actual output is to be compared. Actual output is to be compared with the standard. So standard output, if it is not equal to actual output, will have to be made equal, and only then you can proceed. So here you have something called as a labor cost variance. So first in line is labor cost variance. So here it was standard material cost. So here it is going to be standard labor cost for actual production minus actual labor cost. Alright, this is then further subdivided. So here standard labor cost for actual production minus actual labor cost. So here standard quantity is there. So here it will be, yes, it is going to be standard hours, yes, for actual output, come on, into standard rate of labor minus actual hours into actual rate. This is further subdivided into three aspects. One is called as the labor efficiency variance. Then, sorry, I'll write here labor rate variance so that we are constant. Then there is something called as labor efficiency variance. So we'll write here labor idle time variance. And then we will write down labor efficiency variance. Alright, so labor rate variance on account of improper rate. So standard rate minus, yes, everybody, actual rate into, yes, come on, labor rate manager goes outside, so actual hours. Labor idle time variance. So what is the idle time variance? See, now everybody goes to an office. Total my office timing is 9 to 6. Does that mean that I work exactly from 9 a.m. to 6 p.m.? No. There are in between breaks and everything, correct? But I get paid for full 9 to 6? Yes. I get paid for the full duration of 9 hours. So I am being paid on a totality basis from 9 to 6. But efficiently, I am working for some less amount of time. What is the amount that I am been allotted? 9 hours. What I am working for? Probably I am working for 7 hours. So what is the 2 hours? It is the idle time. I am not working efficiently at that point in time. So I may have a tea break, I may have a lunch break, I may have any other break. So all that is included here. So what is this idle time variance? It is nothing but my standard hours, my actual hours paid minus actual hours worked, which is giving me nothing but idle hours into what is the rate? Standard rate per hour. Now comes labor efficiency variance. Labor efficiency variance. Now efficiency is to be measured in terms of hours worked, because actually jitna kaam kiya hai, actually the time that I have worked, only that probably will be comparable. So labor efficiency variance. So for labor efficiency variance, I will say standard hours. So it is standard hours minus actual hours worked, actual hours worked. So for efficiency it is actual hours worked into, and what is the rate that I am going to take? It is going to be standard rate. So standard rate is what I will apply, because efficiency manager inside the factory is not aware of the outside things. So labor efficiency variance, standard hours minus actual hours worked into standard rate. This labor efficiency variance will be further subdivided. Subdivided into what? Subdivided into two parts. Labor mix variance and labor sub-efficiency variance. So labor mix variance and labor sub-efficiency variance, using the same concept that we had in material, same concept. So there it was SMQ, it will be SMH minus AH. So standard mix hours minus actual hours into standard rate, whereas here it is going to be standard hours minus standard mix hours into standard rate. So this is how my whole labor variance looks like. Now here, as I said, we use the same concept. Suppose if there is idle hours, then in what ratio? If nothing is given, then it is in the standard ratio. So suppose there is a skilled labor, unskilled labor, and total they have given that there are 500 hours of idle time. So how do you divide that 500 hours between skilled and unskilled labor? We will use the ratio of the standard which they have given for the skilled and unskilled. So skilled and unskilled के ratio में it will be divided. That hours will be calculated here, and it will be subtracted from here as far as actual hours worked is concerned. Then labor mix variance and labor sub efficiency variance will be calculated. So this is about labor variances. Next in line is variable overhead variances. So variable overhead variances, small as compared to your material or labor. So here variable overhead variances, again variable overhead cost variance is the first in line. So variable overhead cost variance. Now this can be in the basis of units and it can be in basis of hours as well. So first we'll find out in terms of units. See, basically what is your variable overhead cost variance? Again, here also the units, as far as standard is concerned, the output will be made comparable with the actual output. Alright, keep that in mind for material, for labor and for variable, nothing else. So here the units. So standard variable overhead rate per unit into actual production. So standard variable overhead rate per unit into actual production minus actual variable overhead rate per unit into actual production. So this is what your variable overhead cost variance is if it written in terms of units. However, usually in exams it is asked in terms of hours. So here when we speak in terms of hours, it is going to be standard variable overhead rate per hour multiply by standard hours for actual production. This standard hours for actual production is the same standard hours which is used even in labor cost variance. So this standard hours for actual production which is there here is the same standard hours for actual production which is used in variable, and this is the same standard hours for actual production when used in fixed overheads as well. So overhead variances will have the same hours as far as labor is concerned, variable is concerned and fixed is concerned. Small point, keep in mind, minus, I think this is fairly simple. So actual variable overhead rate per hour multiply by, so this was standard hours for actual production, this is obviously actual hours worked or paid, it is always going to be worked. An implied assumption even by ICAI CMA that this is always actual hours worked, because variable overheads are paid on the basis of the actual hours work. Detailed discussion, please refer my video. So variable overhead cost variance, actual variable overhead rate per hour, let's write it properly, into actual hours worked. Divided into two aspects. One is variable overhead efficiency variance and the other is variable overhead expenditure variance. I'll write here expenditure just to keep consistency, and then this will be efficiency. So variable overhead expenditure variance, difference in rates. So standard variable overhead rate per hour minus actual variable overhead rate per hour multiplied by, so here variable overhead rate, the person goes outside to collect the variable overhead, so actual hours worked, mind you it is always work, this all the hours will be same even for labor as well, and this is efficiency variance, so efficiency in terms of hours that they had thought, so standard hours for actual production which is same as labor efficiency variance minus actual hours for actual production, this is same. So internal bracket of labor efficiency variance and variable overhead efficiency variance is always same because we are taking the same numbers. This may be used at times in your missing variances, keep this in mind. Into, this is also standard rate, the only difference here and there is this is standard variable overhead rate per hour and that is standard labor rate per hour. So standard variable overhead rate per hour, whereas here it is standard labor rate per hour is used there, whereas it is standard variable overhead rate per hour there. And with this we complete variable overhead variances as well. So these are the three major variances as far as cost is concerned done. Now we will separately take up your fixed variance, then we will move on to sales variances. Thank you. Next in line is your fixed overheads, the deadly. Usually students leave this in option, do not do that, just pay attention, focus and things will be done. So fixed overheads, this is the information which will be probably given to you. So this is the given information which you will have. So you will have numbers as far as budget is concerned, you will have numbers as far as actual is concerned. Second, now whenever a fixed overhead budget is prepared, whenever a fixed overhead standard is prepared, first what happens is the person goes to the expenditure manager. That total, what is the fixed overhead expenditure that you are going to incur. So budget first will be fixed overhead expenditure. Then the total number of units that the production manager is planning to make. So next in line is the output that is there. Next, you will always calculate the recovery rate. So I will go to the expenditure manager, get what is the budgeted fixed overhead expenditure plan for the whole year. I will go to the production manager, find out what is the total production units plan for the whole year, and then I will get the recovery rate. How do you find the recovery rate? It is, I'll write here, recovery rate per unit, recovery rate, absorption rate, name it by any name, it's okay. So what is recovery rate? Total fixed overheads expenditure divide by total production. So this is the recovery rate per unit which we have. Then we will compare it with the actual. So this is the fixed overhead expenditure actually incurred and the actual units produced. At the same time, we will also have hours in terms of this. So here we will write down the hours for the budget and we'll write down the hours for the actual. Again, we will find out the recovery rate per hour as well. So how do you find the recovery rate per hour? It's a simple process. Total fixed overheads divided by total hours. So you will get recovery rate per hour. So just for an instance, assume this to be 1 lakh, assume this to be 10,000 units. So here it will be 1 lakh divided by 10,000 units. Your recovery rate per unit will be 10 per unit. Assume this to be say 50,000 hours. So 50,000 hours will give me total fixed overheads is 1 lakh divided by 50,000 hours. This will give me rupees 2 per hour. Correct? Now, using this we will try and find out what exactly is my fixed overheads. variances. So this is my budget, this is my actual. Actual, let's assume this to be 1,50,000. Let the units be 1,25,000. Let the number of hours be, say, 45,000. So this is just general data. I have just taken it without any thing in mind. So this whole data will be given to me. Majority of the data will be given to me. This number of hours is same as the number of hours which is there in labor as well. The standard labor hours and the actual labor hours. So this is budgeted labor hours and this is my actual labor hours. So this is the same hours which is there prevalent in labor as well. Now first things is fixed overheads, expenditure variance, cost variance, fixed overheads, cost variance. What is fixed overheads, cost variance? Conceptually it is absorbed fixed overheads minus actual fixed overheads. What is the absorbed fixed overheads? Absorbed fixed overheads is actual production multiplied by recovery rate per unit minus actual overheads. This is basically my fixed overheads cost variance. So here if I have to put in the context, I will say that the actual production that has happened is, say, 12,500 units. If this has 12,500 units. So 12,500 units is the total production. I plan to recover 10 rupees per unit. So 1,25,000 is what I have recovered based on my recovery rate, less what is the actual fixed overheads that I have incurred. It is 1,50,000. So accordingly 25,000 adverse, as I have been able to recover 25,000 less than what I had thought of or what I had thought of recovering. Correct? Are we understanding? So this is my fixed overheads cost variance. Correct? Then comes my fixed overheads expenditure variance. So what is my fixed overheads expenditure variance? What is the expenditure that I was planning to incur? 1 lakh. How much have I incurred? 1,50,000. So I will say it is nothing but budgeted fixed overhead minus actual fixed overhead. What is budgeted fixed overhead? It is 1 lakh. What is my actual fixed overhead? 1,50,000. So 50,000 I have incurred extra. So 50,000 adverse. Correct? Then comes my fixed overhead volume variance. So fixed overhead volume variance. So what is the budgeted production that I had planned for? And what is the actual production that I have done? Because if I have produced less, then in that case I have recovered less into recovery rate per unit. So what is the budgeted production that I have planned for? And for 10,000 units. Whereas I have produced how much? 12,500. So it's a very good thing for me that I have produced more. Recovery rate is 10 per unit. So it is 2,500 into 10. 25,000. I will say this is favorable because I have produced more and as a result I have absorbed more. Correct? So this is 25,000 favorable, 50,000 adverse, giving me total 25,000 adverse. Any questions, anybody? So this is about my fixed overhead cost variance, fixed overhead expenditure variance, fixed overhead volume variance. Now just understand one thing. So this is like the basic understanding that you have of fixed overheads. This is fixed variable over a fixed overhead volume variance and fixed overhead cost variance can further be written in the form of hours. Just pay attention, how do you do that? Just keep one thing in mind. You know 10 can also be written as 2 into 5. 15 can also be written as 3 into 5. Now this is what I am going to do here. In the same way, recovery rate per unit can also be written as standard hours per unit into recovery rate per hour. Just keep this thing in mind. Recovery rate per unit. What is the recovery rate per unit? It is 10. Can also be written as standard hours per unit. So what is the standard hours per unit I am taking? I am producing 10,000 units in 50,000 hours. So can I say per unit I am taking 5 hours? 5 hours into what is the recovery rate per hour? It is 2 per hour. So into 2 per hour. So this total works out to 10. So point that I am trying to make is recovery rate per unit can also be written as standard hours per unit into recovery rate per hour. This is the same thing that you have to apply here. So here we will now say that this can be written as actual production into recovery rate per unit. This recovery rate per unit can be said as actual production into standard hours per unit. So I'll write down standard hours per unit into recovery rate per hour. Just mathematics is what I am doing, nothing else. Now actual production into standard hours, can I say is nothing but standard hours for actual production. I can write actual production into standard hours per unit as standard hours for actual production into recovery rate per hour, and just try and understand. This is how you will present it if the question has been asked in terms of hours. Clear? Now moving ahead, the same thing applying for fixed overhead. So just pay attention. So fixed overhead volume variance, in terms of output, it is written as budgeted production minus actual production into recovery rate per unit. I will write down this budgeted production minus actual production into recovery rate per unit. What is the recovery rate per unit? I will say it is nothing but standard hours per unit into recovery rate per hour, right? Multiplying. See, now this is the total bracket and this bracket has been split. So can I say this is multiplyable to both of them? Multiplyable to both of them. So when I multiply it to both the bracket numbers, then it will become budgeted production multiplied by standard hours per unit minus actual production multiplied by standard hours per unit into recovery rate per hour remains there. Now in terms of hours, this can be written as budgeted hours for budgeted production minus standard hours for actual production into recovery rate per hour. So in terms of hours, this is how it can be presented. What? Your fixed overheads volume variance. Correct? Now this fixed overhead volume variance can further be subdivided. So fixed overhead volume variance can further be subdivided into fixed overhead capacity variance and fixed overhead efficiency variance. Efficiency variance, correct? Now fixed overhead capacity variance. What is the capacity? So just giving you an example. Suppose the capacity of this class is 50 students and I am able to sit total 60 students here. Then in that case, whether I am utilizing the capacity good or bad, I am utilizing it good. So if the capacity is used more, then don't write it as adverse, write it as favorable as far as capacity variance is concerned. So what is capacity? It is budgeted hours minus actual hours into recovery rate per hour. Efficiency is what you will check here. So efficiency, we will say that what is the standard, so we will take it this way, that see, what is the budgeted production, for budgeted production, what is the budgeted hours that you had thought? We will then write down, okay, so how much is the actual production that you have done? In those terms, what is the budgeted hours, or for that matter, what is the standard hours that should have been? So this is nothing but standard hours for actual production, correct? So I had thought of a budgeted production of 10,000 units taking 50,000 hours, but I have made actually 12,500 units. So accordingly, 12,000 into 5 total, that should have been my standard hours. So standard hours for actual production minus for that output, what is the total actual hours that I have taken into recovery rate per hour will give you fixed overhead efficiency variance. If your standard hours for actual production is less, then in that case this is adverse variance, whereas if this is less, then it is a positive variance, because actually you've taken less time showing higher efficiency. Then last in line is fixed overhead calendar variance, which again breaks here, but we are not getting into those details, so we'll just write down fixed overhead calendar variance. All you have to do is just find out recovery rate per day. How do you do that? Total fixed overhead divided by total standard days. Always remember, recovery rate is calculated for standard only by default for all, for hours, for units, everywhere. What is fixed overhead calendar variance? It is standard days minus actual days into recovery rate per day. This is your fixed overhead calendar variance. So standard days minus actual days into recovery rate per day. Now what is the standard day? Suppose 300. Actually you have worked for 301. Good. You have used the more number of days, and as a result of which the overall fixed cost is remaining same. So for 300 you had thought, but you have utilized it for 301. Don't think that you have worked one day more. Think that by working extra day also total fixed overhead remains same. So if your actual days are more, it is good, it is favorable variance. Students always get confused in this. That's the reason, just clarify. So now this in all completes your fixed overhead variances. Any questions? Alright, next in line, sales variances. Sales variances is basically divided into two aspects. One on the basis of value and the other in basis of margin. Alright, so value variance. So first we'll start with sales value variance. So sales value variance, obviously budgeted total sales value minus actual sales value. So it is budgeted sales value minus actual sales value. What is my budgeted sales value? It is budgeted sales quantity into budgeted selling price minus actual selling quantity into actual selling price. Do not compare the output here. Output is what we are comparing. Output is what we are comparing. So obviously the output here is going to be different than the output here. That is what is going to give rise to the variances. There I was comparing the inputs in material, labor, variable overheads. That's the reason I made the comparable outputs. Here the outputs are compared. So obviously no need to make them comparable. They are going to be different for sure. Then comes my sales price variance and sales volume variance. What is this sales price variance? It is budgeted selling price minus actual selling price into, now this again price manager goes outside, so actual sales quantity. Sales volume variance, budgeted sales quantity minus actual sales quantity into my budgeted selling price. Then my sales volume variance further subdivided into sales quantity variance, sales mix variance and sales quantity variance. By now you should be very much clear. So sales mix variance, this is going to be standard mix quantity. So sales mix quantity minus actual sales quantity into budgeted selling price. Whereas here it is going to be budgeted sales quantity minus standard mix quantity into budgeted selling price. So this is how it works. Next in line. So I think this was smooth enough. The working here will be vice versa. So there material cost is higher, it is adverse. Actual material cost is higher than the standard, it is adverse. Your actual sales is higher than my budgeted sales, it is favorable. So the working is vice versa. Internally, if you do not write the exact wordings as far as, see, if I write ASQ minus BSQ into BSP, you will still get full marks till the time your favorable and adverse is correct. Also, while writing favorable and adverse, write it like that. Write it like this, AF. This is how you have to write in the bracket. Yes, institute ensures that you write that, or else your marks will be deducted. So keep these things in mind. Next in line is sales margin variance. This is much more important than your sales value variance. In a question, if nothing is said, then use margin variance. So here it is sales margin value variance. Everything that we have written here, just the word margin is going to be added. Alright, so sales margin value variance. So sales margin value variance is budgeted sales quantity into budgeted margin minus actual sales quantity into actual margin. Now, what is my budgeted margin? It is budgeted budgeted selling price minus budgeted cost. What is my actual margin? Now, this is the deviation. It is actual selling price minus budgeted cost. Yes, here also, even though it is actual margin, the actual sales price will be reduced by budgeted cost in order to get the actual margin, because the sales manager is not responsible for the cost. So accordingly, the deviation in the margin should be reflecting the budgeted cost and not the actual costs. Are we clear? This is further subdivided. This is further subdivided into sales margin price variance and sales margin volume variance. What is sales margin price variance? It is budgeted margin, same, minus actual margin into actual sales quantity. Whereas what is standard sales margin volume variance? It is budgeted selling quantity minus actual selling quantity into, yes, come on, yes, it is budgeted margin. What is budgeted margin? This is budgeted selling price minus budgeted cost. What is actual margin? Remember, it is actual sales price minus budgeted cost. Okay? This is further subdivided into sales margin quantity variance and sales margin mix variance and sales margin quantity variance. The sales margin mix variance same as here, so it is standard mix sales quantity minus actual sales quantity into budgeted margin, whereas this will be budgeted standard quantity minus standard mix sales quantity into budgeted margin. This is further subdivided into student favorite market size and market share. Now, how is this interpreted? Market size is written as like this. So, market size is what is the budgeted market size and vis-a-vis what is the actual market size. So, I will say budgeted market size, what they had thought, minus what actually has the market size worked out to be. In that, what is our share in this whole size, on which we will apply the budgeted margin to get the market size. Whereas the market share is concerned, it is the actual sales quantity which we have done as compared with, say, our industrial sales quantity which is there, multiplied by the budgeted margin. So how does the interpretation work? What is the total size that we were expecting? What actual size has worked out to be? So this will give us the, multiply this by our share. So say X percentage is our share. That share multiplied by budgeted margin will give us the market size variance. Whereas as far as market share is concerned, what is the actual sales quantity and what is the industrial sales quantity total, what is the difference, and gives us the budgeted, multiply by the budgeted margin to get the market share variance. Alright, so this is your sales variances, which consists of sales value variance as well as sales margin variances. Any questions? Again, standard costing, these sums are only representative. सुनना है तो सुनो, नहीं सुनना है तो मत सुनो, कोई टेंशन नहीं है, because ये वाला जो again सम्स है, ऐसे ही मैंने कुछ रिप्रेजेंटेटिव सम्स उठाया, इट इज गोइंग टू बी अ क्विक फायर, 10 मिनट में 5 सम हो जाएगा, एकदम बोल रहे ना, जस्ट गिव यू अ किक स्टार्ट, बाकी कुछ नहीं समझ में आया, गेट बैक टू मी, ठीक है. सो दैट इज नाउ व्हाट वी आर गोइंग टू स्टार्ट विद. क्वेश्चन नंबर 5 पीएम का है, तुम्हारे ग्रे पीएम का, मैन्युफैक्चरिंग कंपनी, स्टैंडर्ड यूनिट ऑफ प्रोडक्शन, फिक्स, सेमी वेरिएबल, वो सब का पूरा आइडिया दिया है तुम लोगों को. नाउ व्हाट इज पेक्युलरिटी ऑफ द क्वेश्चन, पूरा फोकस फिक्स्ड और वेरिएबल के ऊपर है, प्लस इसमें सेमी वेरिएबल भी है. तो व्हाट यू हैव टू डू इज सेमी वेरिएबल को डिवाइड करने का फिक्स्ड में और वेरिएबल पार्ट में, वेरिएबल का पार्ट वेरिएबल के साथ कवर करने का, फिक्स्ड का पार्ट फिक्स्ड के साथ कवर करने का. तो सेमी वेरिएबल को तोड़ दो फिक्स्ड और वेरिएबल में, वेरिएबल वैसा ही चलेगा, फिक्स्ड वैसे ही चलेगा, दोनों को हाथ में नहीं लगाने का बाद में। तो वो एक बार टूट गया ना, फिर बाद में सेमी वेरिएबल मेरे लिए कुछ है ही नहीं, मेरे लिए तो फिक्स्ड ही है, मेरे लिए तो वेरिएबल ही है। अगेन सेम वे, फिक्स्ड के लिए पूरा उसका एक्सपेंडिचर फाइंड करो, उसका नंबर ऑफ यूनिट्स देखो, उसका नंबर ऑफ आवर्स देखो, उससे रिकवरी रेट मिलेगा, रिकवरी रेट, एब्जॉर्प्शन रेट सब एक ही बात है। वो रिकवरी रेट एक बार मिल गया ना, सो यू हैव टू फाइंड आउट रिकवरी रेट पर यूनिट, यू हैव टू फाइंड रिकवरी रेट पर आवर। Based on that, you will have to just apply all the formulas which are there. Use your brains, रटो मत, use your brains, जो कि मैंने तुम लोगों को समझाया ना, that is how you have to think in terms of solving the question. Same way for variable, if units are given, fair, if units are not given, then in that case, in terms of hours, आपको total thought process लाके sum को solve करना पड़ेगा, ठीक है ना? So what we have discussed अभी concept में, you can apply it there and solve question number 5 easily solve हो जाएगा. We can come to question number 6. Question number 6 again is a sum based totally on your fixed overheads, but इसमें plus वो activity, efficiency, capacity ratios भी है. So these are the same ratios which are there in your budgetary. As I said, November 16 में क्वेश्चन भी आ गया था उसके ऊपर, तो वही चीज को ध्यान में रखो, यही चीज को ध्यान में रखो, ऑटोमेटिकली उधर भी तुम लोग अप्लाई कर सकते हो. बेस्ड ऑन दैट एफिशिएंसी, एक्टिविटी, कैलेंडर, स्टैंडर्ड कैपेसिटी, यूजेज, ऑल ऑफ दैट इज गिवन. All you have to do is just keep on applying the formulas. You will be able to solve it. Then is question number 12. Question number 12 इसके लिए लिया है because उसमें equivalent production है. So 9,000 units and material 100% complete. तो वो 9,900 का जो 9,000 तो पूरा started and completed है. 900 में materials 100% complete है, but overheads and labor 50% complete है. So material के लिए 9,900 output लेके solve करने का, बट लेबर एंड ओवरहेड्स के लिए 50% कंप्लीट है, तो 900 का 50% इज 450, तो वो 450 लेके 9,450 लेके सॉल्व करने का. आर यू अंडरस्टैंडिंग? सो योर लेबर एंड ओवरहेड्स के लिए आउटपुट विल बी 9450, बट योर मटेरियल्स के लिए आउटपुट विल बी 9,900. सो वो बेस दोनों का अलग अलग हो जाएगा एंड इक्विवेलेंट प्रोडक्शन के हिसाब से उसका कैलकुलेशन करना है. दैट इज व्हाट. नेक्स्ट इज क्वेश्चन नंबर 28 व्हिच आई हैव पिक्ड अप. 28 is ZCL Limited superb sum, master sum है ये. मटीरियल, लेबर, फिक्स्ड ओवरहेड्स, वेरिएबल ओवरहेड, सेल्स, सब इसमें कॉन्सेप्ट आ गया, उसके ऊपर रिकंसिलिएशन भी आ गया, ठीक है. सो दैट इज वेयर दिस सम बिकम्स वेरी वेरी इंपॉर्टेंट. सो एक एक कॉन्सेप्ट को ये लोग ने कवर किया है. प्रोडक्शन के ऊपर इसमें ध्यान रखना. वीक्स 52 वीक्स तुम लोग ले सकते हो, 4 मंथ्स ले सकते हो, 12 मंथ्स के लिए 52 वीक्स. सो दैट इज हाउ यू कैन टेक इट. यहाँ पे नंबर ऑफ वीक्स वो लोग ने 50 दिया है, सो उस हिसाब से यू कैन वर्क आउट, कोई प्रॉब्लम नहीं है. याद रखना बजट और एक्चुअल का सेल्स क्वांटिटी अलग होगा, वो प्रोडक्शन के लिए फोकस कुछ और होगा. सो कीप दोस थिंग्स इन माइंड and you will be able to solve this question. This is, as I said, a master question, so good sum to solve. Then we come to question number 39 is a good question जहाँ पे fill in the blanks करना है तुम लोग को. So quantity, hours, rate, price, actual value वो सब find करना है, वो fill करके देना है. But how is that going to be possible? That is going to be possible only if you are able to connect the dots. So यहाँ पे तुम लोग you have to be very clear with the formula. So be sharp in terms of that variable, fixed और labor सबका number of hours same ही रहता है, तो वो hours सबका same रहेगा. फिर जो efficiency variance है ना, variable overhead efficiency variance, labor efficiency variance और अपना fixed overhead efficiency variance, तीनों का efficiency variance का जो bracket का चीज है that is always same. Keep that in mind. Keep these small things in mind and you will be able to connect to each and every thing. ठीक है ना. फिक्स्ड ओवरहेड में एब्जॉर्प्शन रेट होता है, तो एब्जॉर्प्शन रेट कैसे कैलकुलेट होता है, ऑल ऑफ दोस स्टफ्स आर देयर एंड देन यू विल बी एबल टू सॉल्व इट. सो दिस इज अबाउट स्टैंडर्ड कॉस्टिंग. एनीथिंग एल्स यू कैन गेट बैक टू मी.